Welcome to Kaiser Watch with John Kaiser. I'm your host, Jim Goddard.
John, welcome back to the show.
Jim, pleasure to be back on the show. Today we're going to talk about something that's worrying a lot of people, the forest fires in eastern Canada and how they're impacting exploration, and also two updates on a pair of 2023 KRO favorites.
John, how will the Quebec forest fires affect the lithium pegmatite hunt this summer in the James Bay region?
Well, Jim, everybody was getting all pretty excited because the boots were all heading for the ground. Companies had mobilized crews with their XRF guns. Patriot Battery Metals was back to drilling the extensions of the CV5 pegmatite. And then over the weekend, we got word that Quebec had imposed an access ban to all its forests because in southern Quebec, there has been an incredible eruption of forest fires caused mainly by lightning. Apparently, they went from a reasonable winter to suddenly a very dry period. And this part of southern Quebec, which is a lot of deciduous forests, everything's supposed to be green and growing, but because of the dryness, a lot of the leaf litter, which had not yet properly decomposed, helped fuel these fires. So it started in Sept-Îles on the St. Lawrence River, and that was a big problem. And then it spread to that whole region near Chibougamau, which itself they had a 2 a.m. evacuation in the middle of the week. It spread over into the Abitibi area, Val d'Or. And so all the helicopters have been requisitioned to provide support for the fighting. They estimated it was about 150 fires. And this was so bad that the smoke, which ended up wandering southwards into the United States, New York itself experienced the second worst pollution index in the world after India's Delhi, which is, of course, the smoggiest city in the world. So this was a very big deal. And we were thinking, oh, no, if it's already burning this badly and summer is still a couple of weeks away, does this mean there's going to be exploration closure for all of Quebec? What does this mean for all these boots on the ground campaigns in the James Bay region where companies are going to be out there? They figured out where they think the pegmatite outcrops are, or they know where the trends are, where they're supposed to be looking. This is going to be the biggest prospecting boom in the history of Canadian exploration activity, especially because if you find one of these big pegmatites that are going to be 1% or more higher, that's the equivalent of a 6% copper showing or a 8 to 9 gram per ton gold showing. And if you've got, up to 100 million ton potential, that and open pitable, that's like off the scale and what you could hope to find through simple surface prospecting. So it was a pretty glum Monday morning when we heard that everything has been suspended. But there seems to be at least hope that this may not last forever. This part of eastern Canada it's not like California where, like at this point, we will not see a drop of rain until October at the earliest. Eastern Canada does get these rainy fronts that come in, and this has indeed started. The Sept-Îles fire is out. The Canada Resources Canada publishes an interactive map, which I've been monitoring, and I've taken a shot from Monday and compared it to what it is today on Friday to show that the low fire danger is gradually moving westward. I talked to Ian Campbell of Harfang today. They were ready to put out a press release Monday, and they even had their crew in the field that, yes, we started, and they had to pull the crew out because one of the problems is that the government doesn't want anybody in these remote James Bay regions because if somebody has an accident, there's no way to rescue them because all the helicopters are busy trying to put out fires that are destroying infrastructure or threatening to destroy infrastructure and communities. So everything was just shut down. But Ian said that it is now raining. The rain has even in the Val d'Or region, it's wet, cold, and miserable. So this is good. Even that Chicoutimi and Chibougamau area and Belle-sur-Quévillon, That's now marked a blue color. The fires are still burning, but the rain is helping put them out. So we've got our fingers crossed that within 2 weeks, they will give the green light to allow companies to go back into the field. And this is a big thing for the exploration industry, because if we're stuck sitting out an entire summer season of exploration in the James Bay region, that has huge economic implications. All these companies that raised flow-through money will not be in a position to spend it. A key thing about this summer work is to develop drill targets for the fall and early 2024, when snow blankets everything. You need to know where your pegmatite targets are in order to drill them when it's even better to drill them than in the summer. So we have our fingers crossed. For some companies like Brunswick Exploration, this is a big problem because they did options last year. For example, the Plex project, the Anatakal West and Anatakal East projects, which they optioned 80% from Cisco. They also optioned the lithium or critical metal potential of Midland's properties in the Mithril, what they call this Mithril group of projects that used to be copper focused, but they're all next door to the Corvette project of Patriot Battery. These have upcoming expensive obligations. So Brunswick's team was going to do a blitzkrieg, go in there and just scour these properties and discard everything that is useless and keep only that which has promise. And if this ban on access continues, it's going to be a problem. Now, it isn't quite as damp up in the James Bay region as it gets further south during the summer. There are always fires burning up there. Generally, they're ignored because that's part of the natural process up there. Only when they get near an exploration camp or hydropower infrastructure or close to a road where the cars and trucks are moving stuff back and forth during the summer, that's when they put the firefighting crews out there. But the sad thing about the scale of these forest fires is that Quebec had only the capacity to deal with 25% of these fires. So this was an extraordinary crisis. And when you look at this map going to westward into Canada, it's Western Canada where you can see between Monday and Friday, you can see the fire danger zone expanding. So Western Canada and Alberta, of course, has been burning for some time now. They're also going to be impacted. So these forest fires are starting to become a serious threat to the exploration industry. Not if you're doing geophysical surveys and generating targets that you can drill blind in winter because they're undercover. There's nothing to prospect to upgrade the target. This is going to be a worrisome year, but we hope that in the Quebec area, within a couple of weeks, the boots will be on the ground and we'll start getting the news flow. One of the companies that managed to actually get lucky because they were only planning to have boots on the ground in July was Dios Exploration, which has been still busy staking land claims and figuring out which ones are. They focused in the southern half of the James Bay region. Their stock actually managed to go up a bit this week while the other ones kind of sagged as people wondered, when is this going to end? And they put out some additional news. They still have another project that they're secretly working on. But one thing I did find out is that they are using a database of till sampling that Sirios and Dios collaborated on more than a decade ago in this entire region, right down past the Pontax pegmatite system that they discovered that's now owned by Cygnus and Stria. And Sirius was looking for the gold grains in the till, and Dios was looking for the diamond indicator minerals in the till, because that was the purpose of the company at the time. And they ended up finding all kinds of other things. Sirius got to keep the gold potential. They together ended up staking the Pontax lithium system and spun it out as a separate company, which turns out to be Stria Lithium. They're going back in the dikes there are sort of more skinny and separated, so they're not as tricky. It's not as good as, say, the CV5 pegmatites, which are wide, consistently mineralized bodies. and you don't have the dilution of waste rock in between. But Dios has gone back to this database and gone through and found other more subtle lithium indicators within the database, and they've been using this proprietary database in conjunction with all the lake bottom sediment data that the government collected and published, and a lot of geology and their knowledge of the glacial history, which was critical for them when they were hunting for diamond pipes that the glaciers would have dragged the indicator minerals from. So this little company, which has 136 million shares out, trading about 9 cents or so, $10 to $12 million valuation. That's less than a tenth of what Brunswick is trading at. So here we have kind of the market starting to look, okay, we've got the bigger companies, well-financed companies like Brunswick with $16 million in the treasury. They're putting their boots on the ground. We expect them to deliver some juicy targets by September that they will be drilling, and that can turn them into the next Patriot battery metal story. But we're going to have to wait, and right now we have this concern about will we get a lift of the forest access ban in Quebec. And then you have the cheaper companies that have been below the radar, which don't have very good marketing campaigns. The market's now looking sort of down the food chain at these other ones like Dios Exploration and starting to accumulate these because as a sort of catch-up. And most of these companies will not be in a position to make any real game-changing news until the fall when they've got nicely outlined and trenched and channel sampled pegmatite targets. So in the meantime, it's going to be a question of, okay, who actually has interesting claims and is doing the work to turn them into drill targets in the past. There's a big discrepancy between the valuation for the leaders like Brunswick and the little ones like Dios Exploration, for whom the James Bay area has been the backyard for decades. And of course, companies like Harfang, for whom it's been a gold exploration backyard, it's also their backyard for the lithium pegmatite potential. So hopefully within a couple of weeks, everybody has the green light. Dios itself does not plan to put its boots on the ground in July, so it hasn't been frustrated by this. But for the others, it is frustrating, and we do hope that this summer is not ruined by fire.
What has your KRO Favorite Aurion Resources planned for this summer?
Well, I've had Aurion Resources as a favorite for a number of years based on its large land position in the central Lapland greenstone belt way in northern Finland. It acquired this land package in 2014, much of it from a company called Dragon Mining, which had become one of the early groups to come into Finland when the government decided to open it up to foreign companies. It used to be just sort of a state-owned system with the GTK, their geological survey, doing all the exploration. And Aurion Resources, it was repeated this year at 60 cents. And there's been a couple developments in the last few weeks, which got me thinking that the district consolidation that this area needs may get some legs this year. Now, the main project for Aurion is the 70-30 joint venture on the Kutu-Vuoma project, with B2 Gold having spent over $15 million to vest for 70%. They're now in a 70-30, both sides contributing joint venture. They spent another $13 million last year, of which Aurion had to contribute $4 million, and there's a $10 million budget this year. Now, when you see this sort of diminishing budget, that's telling you they're not quite getting what they're hoping for. But the big story in this region is the Ikkari discovery of Rupert Resources. Now, they had acquired the project to the north of where Aurion has its claims, based on a former open pit mine that was sort of a mediocre deposit. And that really wasn't going anywhere. And so they mounted a basal till sampling program, which was intended to deal with the fact that much of the property was was covered by overburden. And that led them to the Ikari deposit, which is right on the border with the Kutuvuoma project and just to the west of the 100% owned Risti project of Orion. And the stock had been sort of a $1 stock. It ran to $5 in mid-2020 very quickly as people realized the scale of what they had discovered. And that turned out to be about 70 million tons of 1.85 gram per ton gold, a 4 million ounce gold deposit. And they delineated it very quickly because it was very consistent, an orogenic system with consistent mineralization. The structure continues onto the Kutuvuoma project of B2 Gold and Orion. And in the past year, B2 Gold has focused on what the Helmi discovery, where they do also have good gold intersections, but nothing really comparable to what's happening with the Ikari system, which is still open at depth and a little bit along strike. This year, B2 Gold is now stepping back along the whole 7-kilometer structure, hoping to find another Ikari along that way. And the problem with the location of the Ikari deposit is that it's right on the boundary. They could delivered a PEA late last year, and it came up with a $1.6 billion U.S. After-tax net present value using 5% discount rate and an internal rate of return of 46%. And this was done at 1650 gold, at 2,000 gold when they modeled it. The value jumps up to 2.3 billion. But when you take a deep dive into the mining plan, you realize, they're only going down 276 meters. And when you read the fine print, you realize, they cannot legally extend the pit wall onto the neighboring property. So they have to go underground after the 11 years of open pit mining and shift to underground mining for the remaining 11 years. And somehow to make it better, they're including open pit mining of the other Vartara project that they originally had. And that's added complexity that they don't need. And they're now marching towards a pre-feasibility study and an environmental impact assessment scheduled for summer of next year. But you really don't want to develop this deposit with this type of mining plan because this is not an efficient development plan. So what everybody's thinking is the ground next door has to be consolidated with the Ikari project of Rupert. How is this going to happen? Now, this is where Orion becomes kind of the linchpin for all of this. B2 Gold's only presence in the area is through that 70% stake it has in that property. The money it's spent hasn't really delivered a developable project. Agnico Eagle has been in the region for quite some time. It operates Europe's largest gold mine, the Katila mine. It's about 40 kilometers to the northwest. It's now an underground mine. And they have about 6.5 million ounces left, of which about 4 million is proven and probable, which is expected to run out by 2034. They have a 14% equity stake in Rupert, so they are the largest shareholder in this. And it would make sense for Agnico Eagle to, say, acquire Rupert and develop the Ikari deposit and then continue exploring in the other areas. Now, Orion itself has spent $41 million since 2015, most of it starting in 2017 when they discovered this fantastic boulder field of high-grade visible gold on the Risti property in the Amarusco area and then also in the Notches area. And so most of the money they spent, about 80% of it has gone into that area. But the results have been erratic, squirrely intersections that are difficult to connect into a mineable resource. And we suspect even if they did, it wouldn't amount to anything particularly exciting. So the company, when they saw what Rupert accomplished with Ikari in 2020, has gone back to basal till sampling, and right now the focus is on the Karas structural trend in the southern part of the property where there has been work done in the past. The mineralization was intersected. It was only shallow drilling. But when they did their basal till sampling, and you compare it to the rock sample map, you can see how the center of gravity shifts to the southern part, where along that structure that continues through, there are likely going to be splays coming off it that could host Ikari-style systems. So Aurion itself, it's chipping in for whatever B2 Gold is still doing on the Kutuvuomo property, but they're also spending money drilling the southern portion, the KRS area, and their hope is to get an Ikari-style discovery. But right now, what needs to happen is Rupert needs to acquire that 70-30 ground, but B2 Gold is in no hurry to help out with that. If it did want to sell it, Aurion has a right of first refusal on that 70%. So when you think about it, what really needs to happen first is Rupert needs to acquire Aurion. But Rupert has an $800 million valuation, whereas that of Aurion is only $80 million. So there's like a tenfold difference. So how do you justify merging a company that has something that actually is worth more than can be demonstrated by the PEA because of the property boundary issues? How do you get this to change? So Aurion made two important announcements in the last couple of weeks. One of these was that they got a deal to acquire the 3% NSR that Dragon Mining still holds on the Kutuvuomo project, and for 5 million euros. And they have until September 20th or so to close on that. Now, B2 Gold has the right to do its 70% share of that, and so we'll wait to find out. But tying up this NSR on that property is a step in cleaning up the encumbrances in that whole area. But what they also announced, which really intrigued me, is they picked up a large land package they call the Savu property. It's a couple 100,000 hectares. It's also in northern Finland. It's east of the central Lapland Greenstone Belt area, and it's a cluster of 8 properties that the CEO, Matti Talika, who used to work for GTK, used to work for Dragon Mining, became CEO in 2020 of Aurion. He spent the past couple of years going through all the data, applying for reservations and exploration permits, assembling all this. And part of what he did was use his connections within GTK to track down a till sampling database that GTK had assembled decades ago covering that whole area. And what he found in it was that there is the western and southern part has a meaningful lithium anomaly in the tills. And I asked him, is this going to be derived from pegmatites in the area? And he warned and said, no, these are likely derived from the micas in the granitoids in the area, but they are a sign that this area had the potential to evolve the LCT-type pegmatites that have the spodumene in it that you want. And the nice thing about this area, it has never been seriously explored for anything. There is a gold project which they've acquired, and there was some work done on that. And one interesting part of the property is the Soakley carbonatite complex, which was discovered a long time ago. It's about 300 million tons of 12 to 13% phosphate. It's on the western periphery of the Kola alkaline province. Most of it's on the Russian side. There are phosphate deposits being mined by the Russians. The Soakley was discovered and looked at by various groups. It's now owned by an entity called the Finnish Minerals Group, which is a specially created entity to deal with Finland's mining cleanup disaster areas, but it happens to own this project. And Aurion now owns the southern third of this complex with past holes in the ground indicating similar type of mineralization. So there's potential value for that too. But it is the ability to go there this summer and just walk the land and see if there are pegmatites sticking out of the ground that are spodumene mineralized. And again, this is part of this whole Lithium Mania 2.0 idea that in 2005, the market was worth $200 million, and it went all into glassware, ceramics, and other industrial uses. Now it's the key to the lithium-ion battery for electric vehicles, and they're talking about a six-fold expansion of demand by 2030 to meet the electric vehicle goals required for net zero emission goals by 2050. So this is the big boom, is where's this lithium all going to come from? And was never bothered with in the past because the market just wasn't there. It was a tiny market dominated by green bushes and the lithium triangle brines. So what the acquisition of this land package means is that if Aurion is going to entertain some sort of deal where it gets acquired by Rupert, it can spin out the Savu land package as a separate company and carry on benefiting from original work done by the CEO Matti Talika. So this is why I'm doing this update on Aurion Resources. They did a financing at 55 cents earlier this year. They have $12 million of real working capital, not counting the investment that's classified as a current asset. So they're in great shape to continue. The company is well owned. Dave Woltan is the chairman and the sort of financial brains behind the company. So this is a company where time is sort of on Aurion's side. It's not so much on Rupert's side because when it marches towards the pre-feasibility study and filing the environmental impact assessment, it could end up stuck with an inferior mining plan that nobody will really want to buy. So the next 12 months is a period where something's going to happen to consolidate this district. Aurion probably will not survive as a 100% owner of the Lonnie Risty and 30% of the other projects, a joint venture with B2 Gold, but it will probably be at a price minimum double what it is now, more if they this summer can find another Ikari potential discovery on the Risty property. And of course, the spin out and doing the boots on the ground up in the Savu area, you could end up with something that totally eclipses what they are looking for in the in the central Lapland Greenstone Belt. So it's definitely a stock to just buy now and forget about. And if we do see gold price start rising, the urgency for Agnico Eagle or even B2 Gold to become aggressive and take out Rupert, that urgency will increase over the next 12 months. But even if gold stays sort of bumping up against this $2,000 ceiling, there's still reason to expect that they want to consolidate and develop what is a very significant gold deposit that's going to end up being a lot more than 4 million ounces.
Why has Eagle Plains Resources, another KRO favorite, which did well earlier this year, recently seen its price decline?
Well, Eagle Plains Resources started off the year at about 20 cents, and then they announced this idea that they were going to take all their royalties and put them in a subsidiary and spin it out to another company, which would go public as a royalty company. And one could see that the way the royalty company was being structured, that represented about a 10-cent a share value. And they proposed that for every 3 Eagle Plains shares, you would get 1 Eagle royalty share. So that helped the stock flutter up into the 30-35 cent range where it stayed for a while. Well, on May 18th, that was the day of record for the spin-out, which means that with 2-day settlement on May 16th was the last day you could buy Eagle Plains in order to get 1/3 of an Eagle royalty share for for every Eagle Plains share. And the Eagle royalty started trading on the CSE, the Canadian Stock Exchange, on May 24th. And it's been kind of a liquid. It started at 40 cents. Now it's dropped down to 23, 24 cents. Its problem is that the Eagle Plains spin-out shares have been slow getting into the accounts of the Eagle Plains shareholders. So there's really, no liquidity, nothing really to buy in the company. And the expectation is that Eagle Royalties will, over the next few years, grow into a substantial royalty company. The flagship royalty that they acquired from Eagle Plains is the Ormac royalty, and this is actually three separate royalties, a 0.5%, a 1%, and a 2%, applying to different claims that cover parts of the Ormac, the Queston deposit, which Banyan Gold is delineating. It's now over 6 million ounces. It's just to the west of the Keno Hill Camp, which Alesco used to operate, but was acquired by Hecla earlier this year. So now we have a major gold and silver producer with a big footprint in that area. It's also acquiring all the Yukon assets of ATAC Resources to the north, another sort of plan of arrangement that's dragging out longer than it should. But that will be the flagship royalty for Eagle Royalties. Now, Eagle Royalties itself is headed by CEO Tim Tremundy, who is also the CEO of Eagle Plains. And I think that the Eagle Plains stock lost the 10 cents because people saw, okay, this royalty is spun out, it's gone. But as I was adding Eagle Royalties to the Kaiser research platform, I was looking at this. These guys have 52 royalties. I didn't know that Eagle Plains had that many royalties in its portfolio. Well, it turns out that what Eagle Plains did was, for those projects not already encumbered by a royalty, it invented a 2% NSR for these projects. Now, its specialty is a prospect generator farm-out company who, when these claims come open, it acquires them, it upgrades them, it then farms them out to companies. Many of them are these property of merit seeking shelves that want to go public and need an excuse to go public. And because Eagle Plains operates these programs, it makes sure that whatever money is spent gets spent properly, so that the property is upgraded, so that when the shell goes on to chase cannabis or something other unrelated to the resource sector, Eagle Plains gets back 100% with value added by the work done. And along the way, they usually get shares in cash as part of the staged earn-in. And most of the time, these companies do not earn in. They give it back to Eagle Plains. But in a lot of these deals, Eagle Plains would negotiate keeping a royalty also, especially in the ones where they would say, okay, we'll sell you 100% of this property. Well, what they did now is, with this 2% NSR, they simply invented it, encumbered every single property in the portfolio with a 2% NSR, and then this was spun out to Eagle Royalties. So Eagle Royalties has a 2% NSR to all these properties that the Eagle Plains had in its portfolio as of a couple of months ago. And what is interesting that I did not realize until this week when I dug into it is that there is a buyback where 1% can be bought back for $1 million. This buyback is held by Eagle Plains. So what Eagle Royalties has is a 1% uncapped, untouchable NSR and a potential $1 million payment from Eagle Plains to repatriate a 1% NSR. So it isn't like Eagle Plains gave away all its royalty potential from its portfolio of prospects. It only gave away half the royalty potential. And now with this 2% NSR legally structured, when they farm this out to any company, you don't have to sit there and haggle about keeping a royalty. Well, the royalty already contractually exists. So this puts Eagle Plains in an excellent position to just figure out how much does the company have to spend and pay to earn what interest in this project, while keeping a call on any of the projects that actually turn into something that's going to become a mine. And this is a brilliant strategy because, of course, Eagle Plains operates all these projects. And if one of them ends up becoming a mine, a 1% NSR is going to be worth more than $1 million. So it will be worthwhile for Eagle Plains to buy back that royalty and make it part of its portfolio. And the other reason I expect Eagle Plains to bounce back soon is by middle of this month, they should be drilling at the Vulcan project, which is a Sullivan II hunt story in southern British Columbia. They did work in the last few years. Last year's work gave them a better understanding of what they think is happening. They're starting a 3,000-meter 5-hole program. 3 of the holes will be from the same platform as drilled last year. One will deepen last year's hole because they realized that maybe this is deeper than they expected. The 2 will fan out from it, and then another 2 will be done of step outs to the north and the south. And the goal is to create a vectoring situation to understand what the architecture is of this sub-basin. Obviously, it's been tilted on the side. The model everybody uses is of the original Sullivan deposit. They see some similarities. They've created, Kerry Bates has created a 14-minute whiteboard video showing how these things form and where they think they are in it. It's worth watching. It helps you understand how these SEDEX systems form. This is not really a classic SEDEX system where you just have a smoker on the ocean floor and it streams the stuff out as thin beds away from the smoker vent. This is actually Sullivan's a more complicated thing where the first stage happened and then a later stage happened which remobilized, harvested the original lead zinc mineralization and other metals and then reconcentrated them in a new vent as a 150 million ton deposit. So that should get some eyeballs on it by mid-July. They should have a rough idea what the initial holds are. Given the sorry history of Sullivan II hunts, the odds are that this will fail. However, this area has tantalized explorers for multiple decades, including Kaminko in the 90s, even Tim Termuende when he was still a junior geologist working for Ascot Resources. He was sat on the drilling holes. And the understanding of what's going on in this area has changed as a result of work they did in the last few years. And they are now in a better position to figure out where a major Sullivan-style deposit is located, if it is there at all. The downside risk is that the weird second stage that created Sullivan never really happened, and that all they'll ultimately find are sort of bedded lead zinc mineralization, obviously underground mineable and not worth developing. But then the stock is priced as if that's the natural outcome. If it turns out to be something much better, the upside will be substantial. And they've also been busy doing farm outs on a lot of their other properties, announcing them. So they are busy with their main model of generating these prospects and finding somebody else to fund their success potential. But the Vulcan for now is a keeper where they think they can make a big score that turns this company into a substantially higher priced junior.
John, thank you so much for the update.
You're welcome, Jim.
I'm Jim Goddard.
Comments made on Kaiser Watch are an expression of opinion only and should not be construed in any manner whatsoever as a recommendation to buy or sell any financial instrument at any time. Archived online at kaiserresearch.com.